Good morning, everybody, and welcome to the Alt Asset Allocation podcast. Today's interview is with Antony Bruno, who's Director of Communications at Royalty Exchange. Have you heard of Royalty Exchange? So this is an online auction platform for royalty rights. The specifics can vary considerably from auction to auction, but you're investing in the future income streams derived from royalty payments, primarily from music. This is a completely different asset class. Returns are around 12% ROI. They're an uncorrelated investment similar to a lot of the other alternative assets, high yield, low correlation. People don't stop listening to music when stocks go down, so this is very different from some other investments. Royalty Exchange is open to unaccredited investors, but you're looking at larger minimum investments, somewhere around 5 or 6 figures. I hope you enjoy this conversation with Antony, talking about royalties in general, royalties as investments, and why this should be interesting for investors, and finally about Royalty Exchange in general and the value that they're creating in the space. Enjoy. Good morning, everybody. I'm here with Antony Bruno, who's Director of Communications at Royalty Exchange. Welcome, Antony.
Yeah, thanks very much. Good to be here.
Glad to have you. Yeah. So we talked a little bit before we started about royalties and what you're doing. I'm really excited to have you. Obviously, royalties as an investment really fits into our whole ethos of uncorrelated assets, something a little outside of the world of traditional stocks and bonds and these traditional assets. But I wanted to start off a little bit of your background. You had said that you've written a lot of the great collateral that you have on your website. So what's your background and how'd you find Royalty Exchange?
Sure. So yeah, I wrote the collateral, but you're the one who called it great. I just want to be clear.
Yeah, no, I did.
Just kidding. But yeah, so I actually don't have an investment background. My background is actually in the music industry for the most part. I was a journalist for most of my career. I guess the most relevant component of it was I was the digital music business editor at Billboard magazine. So I kind of covered the space of the emerging digital music space from pretty much the launch of iTunes until late 2012. So I was kind of right in the middle of how all this stuff, worked, all the transition of formats, et cetera, et cetera. And basically, I worked remotely. I started working at Billboard in Los Angeles, but moved to Denver, and I was working remotely. That kind of limits you a little bit in what you do in terms of progression and such. And being in Denver, being an expert on digital music in Denver, Colorado isn't a highly marketable skill on a local standpoint basis, right? So, and plus with the state of journalism, I made the choice to expand my horizons a little bit and start going into consulting on the communications level, right? So started working with a lot of different, mostly music companies, because that was my wheelhouse. Did a lot of communications with some emerging music services, Beats Music before they got acquired by Apple. Did some work with the Xbox Music service. Locally, there's one here called Beatport. There's one in the UK called Mixcloud. Anyway, I consulted with a lot of these music services on their messaging and how they communicate, how they describe and explain things, basically. So as I was doing that, there was an ad in the local Denver paper for this company called Royalty Exchange. And now there's not a lot of music companies in Denver. So I just okay, I checked it out. I didn't understand any of it. I didn't know what was going on. But I was like, they seem to have some questions about royalties. I'm in the music business. We'll meet. And so he just, met the team and was really impressed with the leadership. After a few months of just consulting, they approached me for a full-time position. And, after I wound down a couple of other contracts, I basically accepted it. And I've been there ever since. It's been, I think it's a little over 4 years now. I did leave briefly to get out of the music business. I went into some renewable energy related interests, but that didn't quite last. And I did the boomerang. I actually came back. I'm like, you know what? That job sucked. If you guys still want me, I'm here. And so I've been back since last November, and happy as can be as a result. So yeah, that's sort of my background. So yeah, basically my job is to not only explain the benefits of how our platform might help an artist from the music industry perspective, because that was my more traditional audience, music, artist managers, publishers, things like that, but also using some of the knowledge I have about how the music industry works and translate and explain that to an investor audience who is unfamiliar with it. So, but it's really just more education, explaining and introducing these new ideas to these audiences that can work together very well, but to date have never really interacted.
Awesome. Well, you're the perfect guy to have onto this podcast.
Oh, great.
So Royalty Exchange actually is based in Denver, right?
Correct. Correct.
I'm curious, a lot of what you're doing is talking to investors and artists about the benefits of
Hmm.
using somebody like Royalty Exchange. Backing up a bit,
Hmm.
starting a little bit more at the basics for somebody a little bit less familiar with what royalties are and how
Hmm.
you invest in them. If you could start kind of bigger picture, what they are, how you would invest in them, why you would invest in them, how you make money,
Sure.
give me the whole pitch.
I'll give you the full funnel here. So, a
Perfect.
royalty is essentially a cut off the top of revenue. Okay. So if you own a royalty in anything, all right, you are collecting a set dollar amount for the sale or use of that thing before anything else. So the way we like to put it is that, it's like the difference between owning a share of Apple stock versus earning a penny for every iPhone sold, right? Um, it's nice owning stock, it's nice getting dividends, but all those things you're kind of lower in the payment tier in that regard, where there's a lot of the dividend decisions are made by a board. Your stock price can be affected by all manner of different things. Whereas the royalty is just very clean and it puts you closest to the revenue stream as there is. This thing happens, you get this, everything else works itself on its own on the sideline. So we try to put investors as close to the royalty stream as possible by offering a direct ownership in it. So that's what a royalty is, to kind of start there. Now in the music business, and I'm going to try to be as really basic, because this can be a rabbit hole that can take an hour alone, trust me. But
Yeah, and like I said, I mean, you have a ton of collateral that dives into these,
yeah,
and you have hour-long videos just on the specifics of these.
yeah,
So that's
get
definitely
it can get a little much, but it's really easy once you kind of get the understanding of it. But in the music business, what happens is this: everyone here knows music. So for every song that's ever been made, essentially there are two copyrights, right, that are created. One for the song as it is written, and one for the song as it is recorded. Okay, so you sit down, take a piece of paper, you write out a song, you write down the notes, you write down the lyrics. That's the composition copyright. Okay, that's one copyright. And then let's say you wrote that, then I take it, I put that in front of me, I take my guitar, I sing those words and strum those notes, and it's recorded onto a tape. That creates a sound recording copyright. So there are two different copyrights. Sometimes the same person owns both, right? Sometimes they're different, okay? But those are the two basic copyrights. Now, as those copyrights are then used, or there's licensing that and other activity that's created around them, they can generate royalties. The songwriter generally is impacted by the composition copyright. Whenever that song that was then recorded later on by it, whenever that song is sold, streamed, played on the radio, um, licensed for a movie or an ad or anything like that, that generates different types of royalties. So you basically, for when it's sold or streamed, when it's reproduced in some way, it's called a mechanical royalty. If it's listened to, if it's streamed over the radio, you hear it in the radio, that generates a public performance royalty. And then if it's used in a commercial or a film or something like that, it's called a sync royalty. It's licensing to sync up the music with the image or the other audio. Okay, so that's the composition side. Similarly, on the sound recording side, same thing. If it's sold or streamed, there's a reproduction, there's a sales royalty that's generated. If it's played on streaming service, it also generates a performance royalty. It does not generate a performance royalty on the radio, right? So if the performer, I don't know, most people don't know this, but when you listen to a song on the radio, the band, if they didn't write the song, earns nothing from that song being played on the radio.
I didn't
Only the
realize that. I read
songwriter.
that
Yeah.
in one of your articles.
That's
That's
just in the
baffling to me.
U.S. Yeah, it's just in the U.S. and we share that unique distinction with Iran and North Korea, and I think Syria. So that's good company to be in
Hilarious.
there, right? But anyway, that's how that works. And and then there's also in some cases a sound recording royalty when that actual recording is used in an ad or a TV show. And so what's great about this is that if you're the composition owner, like Bob Dylan wrote "Knocking on Heaven's Door." Okay, he also performed that. So when Bob Dylan's version of that song is played, he earns as both the sound recording copyright owner and as the songwriter. But there's also the Eric Clapton version, it's also the Guns N' Roses version. Okay, when those are utilized, Guns N' Roses and Eric Clapton, they both, Bob Dylan as the owner of the copyright earns from all. Okay,
Wow.
so that's basically that's how it works. That's a long explanation. I hope that was succinct yet descriptive enough for your needs.
No, and that makes a lot of sense. So obviously, it's very appealing from an investment standpoint. Like if you were able to get in on the ground floor of knocking on heaven's door, like the residual royalty payments of this thing would just be insane, right?
Right. But here's the thing: you don't need to get in on the ground floor to benefit from this. Okay. In fact, it's better if you don't. All right. And that kind of goes into the royalty strategy part. I could pull it back if I need to. But basically, whenever a song is released, it's usually the first like 3 years are gangbusters, right? It's when everyone's listening to it. It's when it gets the most activity and whatnot. And then it typically levels off. In some cases, it might go away completely, right? You never hear the song again. In other cases, like Knocking on Heaven's Door, it's a perennial thing. You continue to get that in movies. You continue to hear it on the radio, stream it, et cetera, et cetera. So while the earnings that it gets per year today might be substantially less than the earnings of that song in its first year after release, the point is that it's stable, right? You can look at it. You look at the last 5 years of earnings for that song. It's generally going to be about the same. It's reliable. Okay, it's not going away. So even getting into it now, you can actually get into it at maybe a lower price. Well, actually, in this case, it'd probably be very high given that song in particular. But
Yeah,
the
I'm
point is
sure
that you almost want to get into it and evaluate it 3 years plus after it's been released, and then buy into what its earnings has settled to, than trying to get it in those first couple of years, because you don't know whether you have no idea where that's gonna go. That's the whole Lindy effect in investing. If people understand that one.
One study that I read was music as a capital asset indicated 75% of the royalty income occurs during the first year after
Yes.
release, and then it depreciates at a 10% annual rate between 1 and 5, and then basically goes to zero. This is kind of the
That's on an
curve.
average basis, yeah. But you got
Correct.
to say that average is almost. I mean, that's a tough average to do because of the vast volume of songs that are out there.
Oh,
The
you hear
lower
them one
end of
year and
that
never
average
again.
thing is so much greater than the higher end. So it really kind of depends on an asset by asset basis, right? So that's why when you, like with us, we allow people to buy a portion of a royalty stream in a song. And when you're evaluating it, you're able to look at its history and kind of see, okay, how long has this asset been earning royalties for starters? How much has it been earning the last 3 years? And then you could kind of create your own valuation that way. And we have a lot. We can get into that if you like, but like that's what you want to kind of look at. So the main thing is that the biggest confusion point is that you're going to come onto our site, you're going to find some band that no one's ever heard of before, you're going to buy a royalty and they take off your rolling in it, right? We are more looking at proven assets that have a history of earnings that can be reliably analyzed and then gotten into at a reasonable price that allows you to continue enjoying that yield going forward.
Yeah, that makes a lot of sense, but begs the question, why would, I guess, the IP owner or the artist be selling the rights to this royalty?
There's a number of reasons. I mean, but primarily because their earnings come only from most songwriters. Let's just speak about songwriters. That's primarily who we work with, right? Their earnings has been disrupted in the digital evolution. Okay, it used to be that people would buy albums, and then when you bought albums, the mechanical royalty rate, just to use that specific type, was far greater. They would earn a big lump sum during that 3 year process. That's when all the sales happened, and then they write another song and repeat, repeat, and repeat. Well, what's happening is that now they're earning that potentially that same amount, but over a far longer time frame. And for someone who kind of relies on a certain level on an incoming per year basis, that could be a little disruptive. Okay, so that's one reason. This allows you to sort of sell those future royalties and collect those today. They don't have to sell all of them, right? You could just sell 25% of a single song if it's the right song, right? But you could collect money today. You could benefit from the present value of money, right? Then just kind of collect them as they trickle on, over time. It's also just on their back catalogs. A lot of them will raise money, use that money to write music, and then release any new music in the future without having to pay off in advance to like a label or a publisher or anyone else. So it gives them a little bit more control over their finances than they ever had before. And those are the two main reasons. We've seen some songwriters are looking to become performers. And so they want to take all the songs they wrote for other people, sell that off, get that money, and then really focus on the new music that they're going to do in the future. There's some of that. I mean, there's lots of different reasons, but I mean, anyone who could be in a position where they could sell, say, 25% of their salary for upfront cash today, continue collecting the other 75%, but utilize that sale right now, today, I don't know anyone who wouldn't at least seriously consider that.
Oh, time value of money,
Exactly.
right? Although
Exactly.
right now, I don't know if somebody gave me a boatload of cash and told me, for my future income, I'm not sure I could confidently invest it in any one asset class right now. So
Different asset classes, sure, of
yeah,
course.
exactly. For royalties in general on Royalty Exchange, primarily music, but you
Hmm.
also have movies and one
Hmm.
third one that I'm forgetting, right?
We do some trademarks.
What are what is like the bull case? What are the tailwinds for royalties in general? Why is this such an exciting new asset class? So I know music streaming and these things have really changed and revived a lot of it, but what other tailwinds are you seeing for music?
Sure, sure. Well, streaming absolutely is one. I mean that it's really revolutionized the music business in different ways, and you're seeing it continue to grow. So that you're definitely in, if you're investing in, we have different metrics that we encourage investors to look at when they're evaluating a royalty stream, and one of those is source of earnings. So this is, does this royalties asset earn primarily from radios play or from streaming, right? Or from CD sales. Okay. So of those three, streaming would be the one you want to invest in, right? Because that's where the tailwind is, that's where the growth is, and it's sustainable, right? It's continuing over and over and over again, so long as fans are still interested in listening to that music, rather. So
And
streaming
so
is a
long as
huge, huge, huge tailwind.
the trends continue, right? I mean, Spotify and these things are expected to explode upward, right?
Exactly. I mean, you look at mobile, you could look at expanding into other countries. You look at continued penetration into mobile devices, continued addition of streaming services into like smart home speakers, into the car. I mean, it's just, there's a lot of greenfield opportunity there. So that's a huge tailwind that's worth noting. The other one, from an investment standpoint, is simply yield. I mean, look at where the opportunities are, particularly now with today's low interest rates, for generating any kind of yield with your investments. I mean, there's trillions of dollars of capital trying to chase better yield out there, and this is actually a high yield opportunity in a massive way. So we actually, I mean, we regularly look at the returns that we see through the platform, and generally, on average, you're looking at around a 12% average ROI. Okay, so that's cash return, right, on the initial investment. That's not factoring into selling anything like that. But generally, like, that's a high yield opportunity that I challenge you to find elsewhere in this with the same level of relative risk, right? So that's a huge tailwind right there. Is just trying to find something that pays regularly at known dates. That's again, it's uncorrelated, as you mentioned earlier. You almost talked my book for me there. It was great. But the stock market goes up and down. The rate for that royalty stream remains the same. There's no evidence that people listen to less music during a downturn in the stock market, right? So there's all of those factors that come into play. And then again, like I said, there's the likelihood that these assets will go to zero are virtually non-existent, and that's what another investment person told me when he was explaining why he was interested in the asset class. I'm not a financial advisor. Past performance is no indication of future success.
All the disclosures, they're everywhere. Don't worry. But
I'm
it's
joking,
guaranteed, and
but
it's
yeah, but
guaranteed to go
yeah.
up. But
So
besides
so,
that,
well, no, I'm not saying it's guaranteed, but
no, I'm joking.
it's
I'm
but it's definitely,
joking.
it may even reduce, but it's like, even if it's falling at a relatively stable and somewhat manageable rate. Okay, so anyway, those are the different motivations I would think for an investor, particularly if you're an income investor.
Yeah, that makes a lot of sense. Obviously, a lot of tailwinds for
Hmm.
royalties in general, and a lot of the stars kind of align here. But what kind of lurking icebergs, gigantic risks to
Sure.
royalties in general do you see?
So let's see here. In general, that's a tough one to answer. I mean, could there be some other new 98 to 2000 when Napster came? Maybe. It's hard for me to see what that might be. Streaming seems pretty stable, so that's one. Um, could there be some? I think it's more specific to the asset, perhaps. Like, you could buy a royalty for a songwriter who suddenly gets canceled. I'm not a songwriter, but an artist. Like, some has some scandal. Boom, that's it. No one plays his stuff. That can impact that specific royalty. That's kind of a hit or miss thing. There are, whenever there's hardship in the music business, you see, a lot of the industry kind of eats itself a little bit, so you get some litigation. So there are some instances of the estate of one artist or songwriter suing a more modern songwriter for writing a song that they say utilize their work without permission, and there could be some change up in the royalty structure. Again, that's very case by case. We've never seen that happen with anything that we've sold, and we're actually seeing. There was a couple of high profile cases, but those are actually starting to get reversed now. Those are the biggest things that I could think of. I mean, even if any of the streaming services go out of business, I don't see that as necessarily a risk because all those subscribers go somewhere. Remember, I was the guy that covered all these services back in the day. And whenever one company went out of business, another one came up and just bought up their subscriber base, and they were just like, fine, same music, different platform, whatever, we'll keep going. So, but that's stabilized quite a bit with Apple Music, Spotify, Google, and YouTube and whatnot. So, yeah, those are kind of the major issues that I could see out there.
Okay, and at risk of let's not go too deep into the weeds, but so I invest in a particular song, and then every time that particular song is played on Spotify or Pandora or Apple Music, a tiny fraction is calculated and paid to the copyright owners, or are they paying like a blanket number to that artist and it's divvied up? Like how does that work?
That's a good question, and I'll try not to get into the weeds. So the answer is kind of depends on which portion of it. So with essentially Spotify will pay the label. Okay, we're going to assume that there's a label relationship involved just to make this easier. So the label has a deal with Spotify for the licensing of its music on the platform. That music gets played, Spotify pays the label then pays the artist based on the contract they have with the artist, and that includes the producer and the different bandmates and things like that. Okay, so that's there. On the publisher side, mechanical royalty, if we're just sticking with that one, generally they either pay the label and the label then pays the publisher, or in some cases they'll have a direct relationship with the publisher, but they basically pay the publisher then pays the different songwriters that may have been involved in the song. So that's how it works kind of on the mechanical side. Not to get too much in the weeds, but just because we primarily deal with public performance, I'll mention that because it's actually a little bit easier. Okay, the public performance royalty is collected by the songwriter generally. Okay, and so the songwriters are usually members of these large organizations called performing rights organizations, otherwise known as PROs. Right? PROs collect the public performance royalties, and then they divvy up the royalties per the split that each songwriter has, and they keep track of all that stuff. So the point is there are entities out there whose not sole job, but primary job it is to track, collect, and distribute royalties. And with our platform, what you're doing is we're inserting the new owner into that split mix based on the established system of payment that's already out there.
Yeah, and this tracking and paying and divvying system, I mean, it sounds like a beast. So
that's why we're
really
happy to
nice.
leave it up to others.
Yeah, exactly.
We don't even that's their job. You're investing alongside them. You don't have to take on that burden. That's their burden.
And the funny thing is, when I'm thinking about this, I'm just thinking, so you find these artists, you invest in, you buy these royalties for these songs that you think are cool, and then you instantly go to like a number of influencers in the space, and you're like, make this song gigantic, and you just have them spread it like crazy, and so it's stuck in everybody's heads, and they're playing it like crazy, so your royalties go up, right?
Yeah, that's funny. I mean, we get this question a lot, like, after I acquire royalty, what can I do to kind of? But the answer is nothing.
Yeah,
don't
you
do
make
anything.
It go viral. No,
Don't. You're not. That's not your job, man. Like, there's a whole business out there whose job it is to do that. If you want to put it on heavy repeat on your Spotify playlist to try to drive up royalties, mazel tov. Okay, but like that's not really going to do much difference. You got labels, you got publishers, you got managers. All these people are already financially incentivized to do what they can to make this song make money. Jim, you're not buying the right to license this music anywhere. You don't have the authority to do that, other than, again, hit heavy repeat on your favorites playlist
all the time. You never know. An investor, they've been convinced royalties make sense. It's a great diversifier. I understand the risks. You talked briefly about the investor due diligence process, source of earnings. Are they sustainable? Where do they come from? You talked about some of the other potential risks about litigation, if these things pop up. But what is the investor due diligence checklist that somebody should be thinking about before they make an investment in music royalties?
Okay, good question. So we make education a priority for investors, primarily because this is a new asset class that does require a little bit of understanding. And so we have a number of metrics that we tend to recommend people focus on. And this is based on our history, on all the catalogs we've analyzed and the returns we've analyzed over time. The number one metric, the volume, as I'll put it, right, is what we call dollar age. Okay. Now, dollar age is a metric that says, for how long has this asset earned royalties? So like let me put another way of putting this. If let's say it earned $5,000 last year, but it's been earning royalties for 10 years, those $5,000 have a higher dollar age and are as such more valuable than a separate song that also earned $5,000 last year, but has only been earning for 3 years. Okay, so they may have earned the same amount in the last year, but the one that's been earning royalties for a longer period of time, those dollars are valued higher than those that have been earning less. So dollar age is the one thing that we look at. And we have it in all of our assets. You can see right there, what it is. The sources of earnings, right? Streaming versus CD sales, okay? And then the other would be the trend rate. So looking at its last 3 years, is it trending upwards, downwards? Anything on a negative 5% trend rate or better is considered a pretty solid asset. So those would be the different areas that we tend to focus on. We actually have, just real quick, there's an ability to leave what we call a standing order on our platform, which is allows you to go and say, okay, I want to invest this dollar amount in royalties that have this dollar age, that at a multiple of X, right? And then any thing that comes through their platform that meets your requirements will create an automatic match to. What you're not reviewing are the artist, the song, right? To a certain extent, that doesn't matter. Okay, it's really those metrics that really are the quantitative differences. Like you can look at a country song, a rap song, and a rock song. Maybe you think you're a music guy, maybe you don't. But how do you know which was the quote better song? You don't. You look at the performance. And the performance is the one thing that stays standard throughout those different differences.
Right. That's a very nice value proposition. So it's an auto investment based on these factors that you've chosen.
Exactly. Mm-hmm.
Just to repeat those, what's the dollar age you said?
Dollar age, exactly.
So you want high dollar age. You want the source of earnings from sustainable sources, probably well diversified, no CD sales, or very low. I guess technically it's still one, probably. And then what was the negative trend?
The trend rate. Looking for a trend rate of better than negative 5%.
And what does that mean?
So you mentioned before the depreciation that you might see after a song. So you want to look at something that's not depreciating in value more than 5%.
Gotcha. Okay, so it's fine to be depreciating, just no more than 5%.
Yeah, 5%, and then that would be over its 3-year average.
Okay.
But like if you want to have a wider base of data to analyze, basically.
Okay. So based on these factors, you come up with some sort of multiple that I'm investing in these royalties, I would presume. Is that the way it works?
When I say you, I mean the investor would determine the multiple over the last 12 months earnings that they wish to pay. That's how we measure. We don't look at like overall dollar amount. We look at what is the multiple over its last 12 months that they're willing to invest.
Okay. And what you normally, I mean, that multiple is very wide ranging, I would imagine, but kind
absolutely.
of what's the low, what's the highest that you can think of?
Oh my goodness. The highest I would say has been over 17.
And that means 17 times last year's earnings.
Last 12 months earnings, exactly.
Last 12 months.
Exactly. And the lowest would be, I guess even the 1 or 2 range. I mean, there's some, just to make clear though, we have 2 different kinds of assets. All right. There's the life of rights asset where you're buying the asset for the life of the copyright, which is typically the lifespan of the author plus another 70 years. So it's a very long time. But there's also assets on the platform you could buy that's only a 10-year term. So you're buying this and you're collecting income for 10 years, after which the royalties revert back to the owner. So the multiples on that are naturally going to be lower because there's a more of a limited scope. So that's where you kind of get into more of the two times or so range and those are generally for newer assets. If someone's selling their asset for say 10 years and it's only been out for 1.5 years, you're going to see around a 2.5x kind of thing going on there. So it's a pretty wide spectrum.
That makes sense. And the much higher ones, these would be like the knocking on heaven's door, just super stable. You're willing to pay a high multiple because it's very consistent.
I mean, going back in memory
staying
here,
power.
the one that went, the song, because we had two that were up in there, two that I can remember anyway. The song was Bette Midler. It was the album, but it was Bette Midler's The Rose, which is, I mean, kind of been around forever, right? So that was a good one. And then the other one was actually a trademark royalty on Listerine sales, which had no end date, which is very unique.
What does that mean?
That means that this is a trademark royalty, so it's not music, but in fact, it's not even a trademark royalty; it's a trade secret royalty. And so the contract with Listerine was such that Listerine has to pay whoever owns this share of royalties by the original inventor of Listerine. They pay a set flat royalty for every gross of Listerine sold, and there's no end date to it. There's no like until this number of years. It's in perpetuity. It's transferable. So I mean, this is something. This is great. This was a contract that was created in 1882 or something like that, right? I should remember.
That's when the original Listerine formula was.
Yeah,
formulated?
It was like the late 1880s, and the inventor Listerine invented it but couldn't sell it, so he basically licensed it to some pharmaceutical company with the agreement saying, "You will pay me, my heirs, and our assigns, whatever it was." I think it was like $6 per gross sold of Listerine in perpetuity, right? And like in the 50s. Whoever, the pharmacy companies gets bought and sold and whatnot, and this royalties continued being paid by all the new owners. And the owner then, I don't recall the name of the owner then, sued saying, "Hey, this is crazy. Paying this thing for 75 years, and the secret formula is out. It's been published in medical journals. What are we paying this for?" Court said, contract didn't say anything about that. Contract just said you're going to keep paying this forever. So as long as Listerine is sold, they have to pay this royalty. And this royalty has been split up like, I don't even know how many ways between like different heirs and people that would sell it. And some of it went to like a real estate. Governor of New Jersey had an interest in it at one point, right? So all these people are collecting this forever. So that went for 17x. That was pretty valuable.
Yeah, that's just absolutely baffling. So you can transfer these royalty rights very easily. I can buy it, own it for 3 years, then decide, I actually like Scope and I hate Listerine and sell the royalties to somebody.
Right. Well, sort of. We do have a secondary market where not every asset that you acquire on our platform currently can be sold on there, but basically public performance royalties as distributed by the PROs in the US, if that's what you've acquired, that goes up on the secondary market pretty much automatically. So what it means there is that it's just there, it's just sitting there. And so you could go to our site right now, this is the secondary market, review like over almost 200 assets that are listed there, and you can make an offer directly to the owner of those assets right now for whatever price you want. Now, the owner could ignore it or say no. So we see a handful of sales pretty much every week of investors coming in and just making unsolicited offers to others. Now, if you actually want to actively sell it, there's some steps you can take. You can put a list price, say, hey, this is what I'm willing to accept for it. There's a little bit more promotion around that on the site and whatnot, and so on. So there is some liquidity there, but it's not as easy as just like selling your stock, in terms of getting rid of the assets. There's going to be a little more of a process involved.
Yeah, that makes sense. So it sounds like a lot of what you're doing, I mean, education is oh so important with this because it's something very outside of the comfort zone of a lot of people. They don't know a lot, myself included, about IP and these things. An investor purchases this. It sounds like it's relatively illiquid, but you do have the secondary market. What things do you want to really ensure that the investor understands beforehand? What key areas are people most often surprised or confused by? Just any light you could shed on these?
Sure, good question. We always encourage folks when they first sign up to basically just sign up to watch an auction. You don't need to bid, just watch. Go how the demand ebbs and flows. Review the different assets that are listed. We'll see a number of different assets. Go into the financials of each one. Take a look at those three metrics we talked about: dollar age, source of earnings, trend rate of earnings, and whatnot. And just take some time to kind of get familiar with how those things work. Look at the secondary market's actually a great place for this as well, because then you could, you're able to see on a quarterly basis the changes on, okay, this is how much it earned, as of that last quarter. Now there's been a new distribution. Okay, now there's new set of data available to you. So just, it's just a matter of watching of these things. That's sort of one area that we always just take some time to watch what's happening before you jump right in, is number one. Two, we have a monthly office hours open Q&A webinar session that we had, in fact, we had it this morning, was our August one. And you can literally sign up, and we limit it to 100 people just so we can answer every question. And we'll answer any question directly from our staff, our CEO, our chief financial analyst, our chief counsel, myself, and we will answer all questions that come in. But basically, and of course, there's a host of information on the site to kind of get you up and running in terms of the basic parameters. But I think that what happens is you want to understand the basics of how music royalties work, the different types of royalties, and the different distribution paths for those royalties. Take a minute to understand that first, okay? That's really important. And then take some time to watch how that might be reflected in the actual assets on the site, okay? That might be second. And then, definitely call in and ask the questions that you have of us would be sort of the third route. I think that would be the easiest ways to get started. And if you're particularly motivated and you intend to start deploying some capital in this space, we have a premium membership tier called All Access Investor, which has a number of benefits, one of which being a more in-depth monthly report called the Insights Report that we send out, where we deep dive into a lot of the metrics on our marketplace. I'm working on 2 of them right now. In some cases, it'll be a deep dive into sort of more industry-wide metrics. We did one that looked very closely at the impact of the pandemic on music royalty sources and flows and things like that, and so on. So that is a premium membership opportunity. I'm not here to shill it. I'm just saying that there's a lot more available through that as well.
Okay, that's really helpful. I'm curious. So investing in music royalties via or royalties in general through Royalties Exchange is one option. What are other options for an investor that wants to invest in royalties?
Oh, that's another really good question. We had several that we once presented in a webinar. So one is there's a public fund you may have heard of out of UK called Hypnosis Songs Fund. And what that does is that they've raised like $1 billion, something like that. And they just buy up a ton of music royalties, and then you can buy shares of the company. And then as those royalties perform for them, you will earn either a dividend or I don't know, I don't know a share, but it's either your price goes up or you earn a dividend or something like that. But you can it's a public fund that you can invest in. I'd be remiss to say that you're not going to see the same types of returns as if you owned a royalty directly, like you can with us, but it allows you to get in at a lower price point. But it is a London Stock Exchange, and I'm not sure how that affects investors here and whatnot. So there are also a number of private funds. It's a little bit more difficult to do, but there's a number of funds that are emerging to do very much the same thing, which is to acquire a catalog of royalties and enjoy the earnings that they create. There are, let's see here, switching gears a little bit, you can invest directly in Warner Music Group. It just went public earlier this year. Not a great time to do so, but they did it, and so they had their IPO, and so you can invest in the label. Investing in the label definitely gives you exposure to the collection of royalties, so that is one part of their revenue stream, but it also exposes you to a lot of other expenses that you would otherwise not get, like what we call A&R costs. A&R is basically the cost that they have to find and develop new talent. That's their sort of their VC fund, if you will, right? And so there's a lot of money gets spread around there for hopefully getting a couple of big hits to pay that off. So anyway, there's that. Universal and Sony are both other major labels, but they are part of larger stock, which has got a number of other things involved in it, like music, movies, and technology and such. Universal is it's basically the Vivendi stock, right? And that's got your Italian telecoms and all the stuff that kind of goes into that. And there's one that's called the Mills Music Trust. It's highly difficult to get into. People don't sell those shares a whole lot, but that is out there somewhere. If you want to take a look at that one, it's a similar public fund where there's it's one catalog. There's no new catalogs coming into it. It's just one set catalog from, I forget what's in it. It's not going to have any new music added to it. It's just, that's it. That's the catalog, man. And if you can find someone willing to sell their shares, yeah, exactly. It ain't going to change, man. So that's another one. And I guess if you wanted to, there's Spotify, there's Pandora. That gets you involved in music. However, you're now invested in the companies that are paying the royalties, which is a little bit of a different model. I'm not saying it's bad. It's just it's a much different
It's a
thesis
very
than
different investment, right? You have operational risk of Spotify, the company, as they're
exact.
acquiring users, but yeah, it
Yeah,
can definitely be an indirect way.
yeah.
So when you're talking about like Hypnosis Fund and Miles Music Fund, do you see institutional interest in royalties on
Oh,
Royalty
absolutely.
Exchange?
Absolutely. Absolutely. Yes. I mean, we've been, most of our product work, if you want to call it that, aimed at the investment side of our business, is looking for ways to allow institutional investors to express their interest more easily through us. The first thing we offered were auctions, right? And auctions were very difficult for an institution to become involved with, simply because the price is always changing. There's a time limit to it. I mean, it's a little harder for them to do. So we've introduced a number of things along the way, one of which being the secondary market in particular. A large institution that wanted to deploy, I don't know, say they wanted to deploy $5 million of capital into music royalties right now, you could simply go into the secondary market and make an offer to every single person in there. Okay, so if as an institution, if you're more, if 7, 8, 9% returns are acceptable to you, you could make an offer that would generate that to a individual who bought a single royalty at like a 12 to 14% return, and be like, yeah, I'll sell that. You know what I'm saying? Like, they bought it at a lower price that allowed them to enjoy those higher returns, whereas an institution is happy with a lower return than an individual would be. So there's a lot of opportunity there, and we're doing more and more things. We're looking at larger catalogs. Like, we weren't sure if an auction would ever work for an asset over $1 million, and we've since found that not to be true. People are more than willing to bid on $1 million plus assets on the catalog. So we're looking at higher value catalogs to add to the platform as well, and other things like that. So there's a lot of opportunity.
So that $1 million catalog, that means one person, group, institution pays $1 million and gets rights to these royalties going forward.
Exactly. So just like whether it's an asset that you bought for $10,000 or for $1 million, it's the same basic premise.
And I just perused your site, but it seems
Mhm.
like a lot of the offerings are much lower than $1 million,
Oh yeah, no, $1
right?
million would be the outlier. We just
Okay.
started testing that not even in the last year, like less than a year ago, and then so it's a new component in terms. Plus, you're not going to get as many at that level, but there, when they do come, we can facilitate it. Is the point, right? Like, we've
Which is
seen
awesome.
investors willing to bid at
Congrats.
that level. Yeah, thanks.
Yeah, that's amazing. So, diving into the platform a little bit more, I think I have a lot more clarity on royalties in general
Mhm.
and some of the risks and opportunities. Deals on the platform, like what kind of deal flow are you seeing? What kind of due diligence do you, Royalty Exchange, do on each deal before putting them on there? How much can an investor get involved? With $100, is there anything I can buy, or
Okay.
am I looking at $20,000?
Yeah, yeah.
Yeah.
Okay, there's a couple questions there. Let me see if I can remember what they all were. So let's start with the last one, because that's what I remember. In terms of the average closing deal, on average, is I think $65,000. So like that's again, averages are misleading, but we've
Well, there's a
seen things
$1 million deal in
close.
there, right?
Right. So exactly, there's all kinds of stuff, right? But that's about the average. So you're looking, if you only have a couple $100, it's not gonna. I mean, in order for an artist to sell on our platform, they have to be earning at least $1,000 in the previous 12 months. Portion of their selling has to have it at that level. So if you're looking at a couple X that, you're talking about, I think the lowest we've done is around $5,000 in a sale.
Okay.
All right, and
Okay.
that's about as rare as the $1 million ones are. Okay, so generally you're looking into the 5 to 6 figures is what
Okay.
these assets move for. Deal flow, I'm assuming you mean new assets being listed on the auction
Exactly.
house. Yeah, on the auction house, you can get anywhere between, a slow week would be 2 or 3, a good week would be 5 to 10 auctions running throughout the course of the week, not concurrently necessarily, but throughout the course of the week. I think we did 8 a couple weeks ago, so that was pretty good. But yeah, so that's kind of what we're looking at deal flow. That's on the auction house. On the secondary market, again, there's close to 200 assets that are just there that you can bid on anytime you like. And it just depends on whether you are making an offer to someone who has any interest whatsoever in selling, and if you make a proper, real, meaningful offer.
Yeah,
Did I miss
and
one?
there was There was one more. Good job.
Oh,
No, well, that's what I did. I wanted to surprise you, just throw like six questions at you and see if you could
no.
remember all of them.
I don't know. I'm happy with three. Three is about as far as my brain will go.
Yeah, same. I'm one. Uh, no, the last question was more due diligence process.
Ah,
So
due
it sounds
diligence.
like
Yes.
the $1,000 a month trailing 12 months is the
Sure.
absolute minimum. So you know that there's recurring revenue in the past 12 months, and you pay a little multiple. But what a what is the other due diligence checklist that you go through before something is
So
on
yeah,
royalty
what we
exchange?
do is, we're trying to ensure that the person selling the asset has a clear path to ownership of that asset. So if someone buys it from them, they also will have a clear path of ownership and no ambiguity whatsoever, no counterparty risk, etc. So generally, what we do is if someone comes and says, "Hey, I have this asset, I want to sell it," the first thing we're going to do is want to look at the statements. We want to ensure that the person, the entity rather, in distributing those royalties that I mentioned earlier, are collecting and distributing those royalties to this person. Okay, that so if ASCAP, one of the PROs, has been paying this person for the last 10 years for these songs, we feel pretty comfortable that they're the one who's going to be able to sell it, right? So that's what we do. We ensure that there's no liens, encumbrances, or judgments against them. So tax liens, anything that might siphon off any of the royalties that that person is earning after the distribution is made from the distributing party, right? So we'll make sure we look into that. And those are the general areas of due diligence that we do. In terms of the investors' due diligence, yeah, I mean, you have to look at, we present we do present the earnings, we do present the last the listing tab, right? The easiest stuff to access would be the last 3 years worth of earnings and the sources of earnings and the top songs, et cetera, that you can review. There's also everything we have, you'll have an opportunity to look at. It's a big old CSV file, and you can manipulate it any way you like and create any kind of forecasts or whatever that you like. So that's all available to you as well. But yes, there is, the only assurances that we're making is that that this person is selling this asset on our platform. We are a marketplace. Okay, we're not a broker. So our job is to connect buyers and sellers and facilitate those sales.
Yeah, that makes sense. And I mean, in terms of investors on the platform, what kind of mix of institutional versus smaller individual retail investors do you see?
It's predominantly retail investors, just by nature of the format and the history that we've had. So rich dentists in Houston looking to invest, an extra $200,000 in an alternative asset to diversify their portfolio, that sort of thing. But we do have increasing almost by the day interest on the institutional level. Institutions are highly, highly interested in how they can get involved in this asset class. Most of them talk to us out of an educational standpoint first, and then try to look at, okay, where are there opportunities that they can work with us to also acquire those royalty streams. So institutions are getting, I mean, when I say institutions, I'm even talking about sovereign wealth funds. I mean,
Oh,
it's
absolutely. I
it's
mean,
not
where else are they going to put it and get
right.
10%? I mean,
Exactly. So there's
the
a
answer is
lot of
nowhere.
the interest is growing. I can't name any of them obviously,
Right.
but in terms of most of the activity we're seeing is the retail investor.
Okay. And then in terms of tools for the retail investor to get more easily invested, do you have any plans to launch some sort of crowdfunding mechanism or some sort of royalty exchange fund, that's automatically like the auto investing in smaller increments or anything like that on the roadmap?
Not necessarily. No, we don't have any plans on becoming a fund. We get asked that question all the time, and our focus is remaining in the marketplace, hands down. Um, in terms of other ways of making it easy for retail investors, again, we do have the automated investing standpoint. Um, there's no other features imminent that I'm willing to share at this point, but I can say that we are constantly innovating, trying to basically bring. I think the best thing we can do to help investors on our platform is to increase the opportunities available to them to invest. All right. So if you look at our track record, it started with an auction where someone would list, someone would buy, and then that deal would be closed. They will have expanded it to the secondary market where someone could buy on the auction platform, and then given the asset can have that asset listed on the secondary market. So that now gives you more opportunities to place offers now to other investors, right? So we are expanding and working on some very imminent features, flexible and easier ways. So it's just a matter of like our challenges have never really been from demand. The demand among investors have always been very high, and it's higher than ever. Even in this current investing environment, we have seen an explosion since April in investor interest in getting into these assets. Our challenge has been, and likely always will be, on the supply side, on getting assets for them to buy. And so as we iterate on that side of things, we hope that the investors that are involved will benefit from it.
And these investors, how do they normally find Royalty Exchange and what are they looking for? They're just looking for uncorrelated returns and they
Yeah.
find you from Google or what?
Yeah, I mean, if you invest, there's all of the above in terms of how they find us, right? They either hear about us on shows like this, they read about us, then we've done a decent amount of success in press on the investor side, the Wall Street Journal, because of newcomers to the market like hypnosis, which is a different value proposition for investors, but just adds to the drumbeat, right, of music royalties as an investable asset class, which is great. Okay, so yeah, they find us. We average over 1,000 new investors registering to the site a month. And that's twice what it was like a year ago. Okay, so which was good then too, I thought. But yeah, they just find us either by Googling how do I buy assets, they read about it, they get interested, they join, et cetera, et cetera. Yeah, so what they're looking for is exactly what you said. They're looking for an alternative asset that's uncorrelated, that delivers yield. Those are the top three, right? Generally. Yes, we have some folks that are, if they're purely music fans that just kind of want to check stuff out, a lot of them get weeded out pretty early on. This is it would be a mistake to think this is like some kind of novelty, fun, like really highly glorified merch or something like that. I mean, people, get into what they buy sometimes, and that's fine. But it's really important to understand that while it is music and while there's a lot of pop culture, trappings that comes with, the investment thesis behind it is as sound as any boring municipal bond. I mean, like there's maybe that's not a perfect example in terms of thesis, but the idea is these are serious investments. Okay, these are not just, hey, look, I own part of Cardi B or something very foundational thesis that you're investing in here, and those are the kind of folks that ultimately engage in the platform.
That makes sense. And Royalty Exchange is only accessible by accredited investors or anybody can?
No. You do not need to be an accredited investor. Anyone can register. Once you register, if you actually do want to place a bid or make offers, we do have to go through a short verification process, but that verification process is not making sure that you're in any way accredited. It's just that you understand the rules of the platform, that if you make a bid, you actually have to honor that bid should it be successful, and not just be like, hey, I'll just throw a bid up there and see what happens. Oops, I won. You have to kind of cut that
50K.
stuff out.
Yeah.
Right, exactly. And, we have to ensure that, you are able to transfer the funds within 2 business days to satisfy the sale and things like that. So it's a short form you fill out on the site, and then it's a short 5-10 minute phone call with a member of our account management team. Once you're verified, it's a one-time process. And once you're verified, you can bid or make offers to your heart's content for as long as you remember.
Okay. And then fees from the actual auction itself and then ongoing, what do those look like?
No. So the only fees that are charged to an investor is we call a marketplace fee at the point of sale. That is going to be 1% of the closing price of the listing with a minimum of $500. And that's a one-time fee that goes to the cost of us administering those payments for you after you've acquired it. So you're not buying it from us, you're buying it from the individual, but we facilitate the transfer of the funds on an ongoing basis for a one-time fee. And that's it.
Easy to understand. I like that. Speaking of easy to understand, what is the biggest misconception you see from investors when they come onto the platform?
When they come on the biggest misconception in general is this idea of buying low, selling high, unknown act, and they're going to be the next New Kids on the Block or something like that, right? It's really an education about investing in older assets, particularly. In fact, here I will say that once they're on there, there's a lot of investors who, and I understandably want to invest in music they've heard of before. I've heard that. Oh, Bette Midler, I know who that is, that kind of thing. And so generally, you'll see, if you're to normalize all the data, you'll see people probably overpaying, quote unquote, overpaying, because, it's relative, for assets that they recognize and that they know than for assets that they don't, which is interesting. Because at the end of the day, it's really about the performance of the earnings that really drive the returns, right? So I would say the biggest misconception is that something that I recognize is somehow more valuable than something that I don't, or even something that I like. Musically, investors on our platform that have had the most success have acquired catalogs of artists and music that they have never heard of before. They have no idea who this person is. And this is like, and I'm talking like household names like Cardi B and others. Like, I don't know what Cardi B was, but his catalog looked great. So he's doing great with it,
That's awesome.
versus, other stuff. So that's, so there's a lot of stuff on it that you may not recognize, but it's really worth looking at the fundamentals of the earnings for it to really be successful, I think, or at least be more successful than others.
Which is really interesting because, investing based on spreadsheet numbers is always a very dangerous thing. But with royalties, it's almost like, no, you don't know what a good song sounds like, or that will pay well. Like something that has a great jingle to you doesn't mean it's going to be a great returning royalty, right? So it's very interesting, that
Exactly.
aspect
It's like,
of it.
I don't know about hip hop. I'm not sure that's going to really stay. Like, okay, knock yourself out. But
Yeah, they work well, right?
yeah.
Maybe. Uh, with royalties in general, what gets you most excited over the, next 2 to 5 years sort of thing?
With royalties in general, as
Yeah,
an
I
asset
mean,
class.
more asset types coming online.
Oh,
Just
it's an interesting platform. So I'm looking forward to, like, we've been at this for about a little over 4 years now. Um, I would love to see a lot more artists using this as a regular part of their careers, of their day-to-day lives. It's still something that a lot of creators are trying to wrap their head around in terms of what is the present day value of money. How do I utilize this as a new way? Like one of the phrases that one of our founders used the other day that I'm going to steal and use is that we're trying to be an arms dealer for a creative revolution. Okay, like the
I like
ability
it.
for the creative class to get access to capital outside the traditional debt heavy, and we're part of that, and I'm proud to be part of it. It's what keeps me at the company more than anything else is the ability to offer real meaningful capital to a creative class that has been victimized in some cases. I don't want to overly state it here, right? But over the years, where they could really take control of their financial future, really gain the artistic freedom that they need. That excites me tremendously, and I'm looking forward to finding more and more ways to make that happen and make it a more regular part of this industry that I've covered for so long. So that's what excites me.
Antony, really, really good interview. Really appreciate you coming
Oh, thanks for
on
having. I enjoyed
today.
it. I
Yeah.
haven't done one in a while, so it's good.
Perfect. So I'll be linking up a lot of the things we talked about in the show
Mhm.
notes, but what do you want to leave my listeners with? Where can they go to find out more about you, about Royalty Exchange?
Sure. So, if any of this sounds interesting, a host of information available to you. I would start just, go to the investors tab, and it kind of lays out the basic case for what it is that you're able to do on our site. The blog has an investor resources section that has a number of different guides and resources and articles. We send out a marketplace update every week that summarizes the activity in the marketplace. Here's what's available now. Here's what's bought. Here's what's sold. Here's some, we share links to news articles about this space so you can educate yourself. We have monthly office hours that, again, we encourage you, if you're new to, or even if you're not new, to participate in and ask your questions. We love talking about this stuff. And we love educating investors as to the opportunities that are available to them. So just basically start at the website. And if you have any other questions, I'll even throw out investors@royaltyexchange.com is a kind of a catch-all email that myself and others monitor and to answer questions as well are created just for you.
Antony, really appreciate it. Thanks for coming on today.
Oh, hey, listen, it's been a blast. Thanks for having me.
Thank you. There you have it. Thank you for listening. I really appreciate your support. Show notes, transcript, links, and more can be found on our website at altassetallocation.com. If you'd be so kind, please share this with anyone you think might be interested or get some value from this conversation. If you have any questions or comments, please reach out. I'm always happy to hear them. Lastly, if you're on YouTube, please like the video or subscribe to the channel. If you're listening to the audio version of this, please subscribe to the podcast and or leave a review. This really helps more people find the podcast, and I really appreciate it. Thanks again, and hope you have a fantastic day. Happy investing.